Hello and welcome to Business Incorporated. I am Bisi Adebayo. Coming up on the program today. Tough times ahead for Kenyans as National Assembly approves reversal of key tax. Ethiopia's export hits $1.33 billion in 5 months. And IMF approves $48.8 million to Liberia to help with its programs. Well, let's begin the show today, as usual, by touching base with intraday market numbers from the African continent. Now, investors seem to be enjoying the Santa rally as the markets we track were positive at intraday. Here in Nigeria, the main index was marginally higher by 0.04%. While the GSC in South Africa reversed its negative trend and was up 0.27%. In Egypt, the main index advanced 0.29%, while Kenya closed positive on Tuesday. Investor sentiments in the Middle East were mostly positive at intraday, with Dubai's main index surging the most by 1.42%. Abu Dhabi's index was next in line, posting a 0.81% gain. Elsewhere in the region, Saudi Arabia's market rose 0.23%, and on the flip side, the Qatari index was the only laggard at intraday by 0.13%. And in Europe, markets opened higher today, and that came as investors hoped a Brexit trade deal could be reached amid concerns over the approval of a long-delayed U.S. coronavirus stimulus package. But let's hear more from Conrad Busen in Frankfurt. Good afternoon, Conrad. It's good to see you again. Of course, it's the last trading day before Christmas in Frankfurt, and investors had to digest a couple of things. And among them is a report that the U.S. President Donald Trump is opposing the $900 billion US dollar relief package, and that then the news that France is easing its ban on travelers and freight from the UK. How's the mood like on the trading floors where you are? Subdued or lifted?
Slightly lifted. The German share index is up today on this, as you said, last trading day before Christmas. You know, even if Donald Trump will not sign this bill, this rescue package bill, it's very likely that it will pass because Congress could still pass it with a two-thirds majority. This is what causes the optimism to remain on the trading floors. You know, since the election in the United States, the Republican Party has more and more seen the need that it has to prove that it can do business, that it can make politics, and this more independently from Donald Trump. The Republicans now are focusing on winning future elections. And but before this background, of course, passing that bill, of course, finding that compromise, this bipartisan compromise with the Democrats, helps the Republicans much more than the alternative, which would be not to pass the rescue package. This would result in a total standstill of America, of its public service. It would probably mean a strong recession, another recession in the US. And this is not what you want to tell people in the times of the corona pandemic, which has hit America so hard. So that all makes it very likely that despite Trump's resistance, the rescue package will eventually become a reality in the US.
All right, now let's talk about German luxury car maker Daimler, which is preparing a stock market listing of its truck division, according to a report by the German business newspaper Handelsblatt. But would this be an exciting IPO?
Oh, yes, it would be exciting because the truck production and the truck sector, just like the passenger car sector, is currently on the way to a huge it is experiencing a huge transformation away from combustion engines to electric cars. And also self-driving trucks is a topic for the future. So it would be exciting to see how the truck division of Daimler can tell an IPO story, a convincing story for investors. that shows that this division of Daimler is really able to face the challenges. In terms of timing, it would be very interesting to see that IPO at the moment because of Corona and its impact on capital goods expenditures. The demand for trucks worldwide is down, in particular for buses and coaches. It's basically come completely to a halt. But next year, after Corona, this is expected to rebound, which would make the perfect scenario for a company like the truck division of Daimler to come to the market, tell this IPO story and, sell its shares.
All right, Conrad, it's about 48 hours to Christmas, so we can't stop talking about it. It's been a hard year for most of us with the coronavirus pandemic. Has this in any way influenced the Christmas presents trends in Europe? What are the trends this year?
Well, those trends really have been influenced this year by the corona pandemic. Everything home is in demand here in Europe. Home office, home entertainment, home wellness, of course, and kitchenware. The number of kitchen products being sold and bought during the weeks before Christmas has increased 133% compared to last year. Some of the trends of recent years have been accelerated, like computer gaming. Sales here this year are estimated to increase by at least 25%. But also another trend has become stronger, the trend to be less consumptive and buy less goods for Christmas, but on the other hand, to give each other quality time. For example, a voucher about something nice to do next year after the corona crisis is over. The survey people, the ones that ask consumers what they give each other as presents, have found out that this trend, the one for quality time, is highly on the rise this year.
All right, Conrad, of course, Christmas is all about giving. And of course, one thing the pandemic has actually brought is the fact that many people get to spend time with each other indoors at home. That's talking about families. All right, on this note, we'll wish you a very Merry Christmas and we'll see you on the other side of Christmas. And let me add that I'll be expecting my gift from you, Conrad. We'll talk about that much later. Do enjoy your Christmas holiday.
Christmas.
All right, let's see how the markets in the UK are performing at intraday, especially after hints that more parts of England will be placed under Tier 4 coronavirus restrictions to combat the new variant of COVID-19. Juliana Olayinka will be telling us more about that. Good afternoon, Juliana. The Community Secretary, Robert Jenrick, has suggested more areas of England will be placed under Tier 4 coronavirus restrictions by earliest Boxing Day to combat the very worrying hyper-infectious variant of COVID-19. Any idea what parts will be affected and what reactions are you getting regarding this?
We're not sure what parts. I think a lot of people are discussing West Sussex and some parts of the southeast. But to be honest with you, Bissy, what we're expecting and anticipating is a full national lockdown, the third national lockdown in Britain. Britain's COVID-19 crisis has escalated so dramatically and so quickly over the past couple of days. And just to think about it, a couple of weeks ago, we were celebrating and jubilating over the inoculation of its citizens. But you're right, Community Secretary Robert Jenrick has been doing a series of media rounds, and he said that on Boxing Day, potentially there could be some regions going into Tier 4. What Tier 4 essentially means is that you are in a lockdown. All non-essential retail is closed, the hospitality sector is closed, leisure is closed, and you cannot mix or mingle with anybody outside of your household. Now, what we were always told by the British government is that once tiered restrictions are put in place, they would be reviewed 2 weeks. So we were expecting an update on these new tiers on Thursday, but the fact, on the 30th of December, but the fact that this new strain of COVID is 70% more infectious, ministers are very, very worried. They have still put in place for some regions around Britain that you can mix with one other household, but they are expecting the COVID-19 cases to build up expeditiously. And so anytime now, we will have an announcement about whether or not there will be a national lockdown or if other parts of the country will go up into tiers 3 and 4.
And everyone is waiting to hear what that announcement will bring. But speaking of the new strain of COVID, the pound firmed earlier today after 3 days of falls as France lifted a partial border blockade aimed at stopping the spread of the new COVID strain. Is the pound still holding sway at this time, and how are the stocks performing?
Well, the FTSE all shares pretty much unchanged at intraday. There are so many different issues that are causing anxiety for investors. Brexit, which is really weighing heavily on the pound. Will there be a deal? Will there not be a deal? Sources close to Downing Street and Brussels are keeping a really tight lip. And I think that's because there are so many unaccounted stories that were linked to the press yesterday. Obviously, as well, we're having this huge issue at Dover. As soon as France and Britain did agree to reduce those restrictions, we did see a lift in the pound, but there is still a massive backlog. Again, there are unspeculative amounts of how many drivers are queuing up. Some say 3,000, some are saying up to 10,000. That's weighing heavily on the FTSE all share at intraday. But the all share is up 0.06%. The FTSE 100 is down 0.07%. And the FTSE 250 is up by 0.48%. In currencies, the British pound up on the US dollar at intraday by 0.35%, up on the euro by 0.11%, and up on the Japanese yen by 0.18%.
All right, let's take some company news before we wrap this up, Juliana. Octopus Energy will soon begin supplying electricity to homes in Japan under a new deal struck with Japanese utility company Tokyo Gas that values the UK technology startup at more than $2 billion. Can you tell us more about this deal?
This is a great story, a great British business story to end the Christmas season on. Octopus Energy is fast becoming one of the fastest growing energy companies, not just in Britain, but actually in the world. Over 5 years, they've built up a 1.5 million market reach in the UK, and they are spreading their global presence. And now they're going to be spreading it in Asia. They've teamed up with a company called Tokyo Gas, and what they will be doing with this company is supplying renewable energy into Japanese homes. And Japan is pretty much lagging behind Britain when it comes to using renewable energy. I believe at the moment they only supply about 18% of Japanese homes with this. With this new deal with Octopus Energy, that could be increased by up to 50%. As you said, they have valued the company at over £2 billion, $2 billion, which is absolutely enormous, and almost 30% higher than when it was valued 3 months ago. So this is a massive deal for them. As soon as this deal was announced, their shares went rocketing higher. And as I said, considering how doomy and gloomy it's been in corporate land over the past couple of weeks, this is a great story to end on.
Absolutely, Juliana. And I can see that you're already in Christmas mood with your pretty red dress. All right. I wish you a Merry Christmas. We'll see on the other side of Christmas. But don't forget, some of us will be working on Christmas Day. But all the same, enjoy your holidays. We'll see you then.
Thank you, Bissy. Merry Christmas.
And stocks in Asia were higher on Wednesday following new remarks from U.S. President Donald Trump surrounding the new COVID-19 relief package. The Shanghai Composite was up 0.76%, while the Shenzhen Component advanced 0.956%. In Hong Kong, the Hang Seng Index gained about 0.7% as at its final hour of trading. Now, South Korea's Kospi jumped 0.96%, while in Japan, the Nikkei 225 was up 0.3%, and the Topix Index closed 0.23% higher. Shares in Australia edged higher by their close, with the S&P ASX 200 gaining 0.66%. And in the U.S., stock futures stood little change in early morning trading after President Donald Trump expressed concerns about the new COVID-19 relief package, which could delay the deployment of funds to struggling Americans. Dow Jones futures were 5 points higher. The S&P 500 futures and the Nasdaq 100 futures were also little change. But late on Tuesday, Mr. Trump called the new $900 billion COVID relief bill an unsuitable disgrace and admonished lawmakers to alter the bill's content, especially the amount allocated for direct payments to Americans. On Tuesday, the Dow shed 200 points despite a 2.9% jump in Apple stock. The S&P 500 slipped 0.2% for its third day of losses. All right, we have more stories for you when we return in just a moment. We'll be talking about what lies ahead for Kenyans as talking about their tax rates and, of course, stories coming from other parts of the continent. You stay with us. Welcome back. Kenyans will face tough times from January following the reversal of tax rates that were reduced as part of the government stimulus package in March due to the COVID-19 pandemic. The National Assembly on Tuesday approved the reversal of the key tax rates, which will take effect in January 2021, signaling tough times ahead at a time the economy is struggling to survive. Members of the National Assembly were focusing on the proposed reversal of pay-as-you-earn and corporate tax from 25% to the normal 30% and value-added tax to 16% from 14%. The majority of MPs support the motion, saying that taxes are the country's main source of revenue. The tax exemptions had been issued by President Uhuru Kenyatta in March to cushion the effect of the economic meltdown caused by the COVID-19 pandemic on the Kenyans. An Ethiopian government has announced a gain of $1.33 billion in exports in the last 5 months, showing a 20% increase from the same period last year. According to the Ministry of Trade and Industry, the gains were recorded from the agriculture, mining, industry, and other sectors. The agriculture sector covers 62%, while mining and industry contribute 23% and 12% respectively. The minister, Milaku Alibel, says industries had played an important role in creating sustainable jobs and increasing productivity, and small and medium enterprises had greater contribution in this regard. The board of the International Monetary Fund has given the Liberian government $48.8 million to help with its programs under the extended credit facility of the bank. The Washington-based fund says restoring macroeconomic stability, providing a foundation for sustainable inclusive growth, and addressing weaknesses in governance remain the main objectives of the ECF facility. The IMF explains in a report that there was a decline in economic activity in 2020, but there are signs of recovery emerging and inflation is moderating. In addition to that, the IMF notes that imports in the first half of 2020 were down by about 7%, due largely to the global COVID-19 pandemic. As heads of states agreed on revised instruments, African countries are busy preparing for the Continental Free Trade Area that will come into effect on January the 1st, 2021. 54 out of 55 countries signed and 21 countries signed and ratified. In May last year, African leaders launched the African Continental Trade Area with the intention of uniting 1.3 billion people and ushering in a new development era on the continent. Analysts, however, believe that beyond the celebrations of achievement begins the huge task to handling the challenges that could hamper progress like infrastructure. Let's see this report from South Africa.
Africa Continental Free Trade Area Agreement. African countries hope to grow and expand the economic benefits experienced through regional cooperation and integration, as previously attempted through regional economic communities such as ECOWAS, SADC, and the Common Market for Eastern and Southern Africa, COMESA. At the last meeting of the continent's leaders, they say it's all systems go come the 1st of January 2021.
It's one of the most significant milestones in the continental integration project. It will be the clearest affirmation yet that Africa is determined to take charge of its own destiny and that its success and development is fundamentally tied to harnessing the potential and energies of her citizens.
The Africa Free Trade Agreement, it's about the flow of trade. And to support the flow of trade, you need to have good infrastructure that promotes movement of people and goods.
The park connects over 1.3 billion people across 55 countries with a combined GDP valued at USD 3.4 trillion. It has the potential to lift 30 million people out of extreme poverty.
The integration anticipated aims to unlock manufacturing potential and facilitate industrialization in Africa while driving economic growth and creating employment. We asked Ronim Konazi, a corporate and international trade lawyer, to take us through what could be teething problems, if any, beyond the shared optimism.
I think in the short to medium term, the advantage could perhaps be on the factors I've mentioned around food security and medications and vaccines. But much more needs to happen in terms of infrastructure, building regional infrastructure to making sure that the rail tracks are functioning properly to accelerate trade between these countries.
Even though plans for the creation of the African Free Trade Area were momentarily disrupted by the devastating coronavirus pandemic, the chairman of the African Union, President Cyril Ramaphosa of South Africa, says the agreement has shown that Africans are capable of achieving a lot when they stand united. Come January 2021, hopefully the world will begin to see the implementation of what's been achieved on paper.
As we wind down, Kenya's mobile banking pioneer Safaricom is in talks with financial services providers about expanding its offerings over the next 5 years as it seeks to emulate the success of AT Group's Alipay. The company's CEO, Peter Ndegwa, says the bank is negotiating with fund managers, investment banks and insurance companies to partner on a raft of mobile phone-based savings and wealth management products. East Africa's biggest company by market value is plotting the evolution of its mobile money payments platform M-Pesa, which allows its 27 million customers to transact without smartphones. Income from M-Pesa is expected to continue rising even as voice revenue growth rates probably slow to single digits over the next 3 years. And that's our program today. Thank you for watching. I'm Bisi Adebayo.